Okay, Ambareesh Baliga, Edelweiss Financial Services joins in to talk about the fundamentals of the market this afternoon. Ambareesh, hi, good to see you in.
Hi, good afternoon.
Afternoon. It's been quite a rough amount of weeks for the market now, and we're seeing some amount of respite today. What is your call?
I think the respite is only temporary. What I was talking in the last couple of weeks, that clearly we see the markets going down. And I suppose the first stop is going to be closer to about 5500, 5550. So again, we don't know whether it will be a sharp move from here to those levels or whether it will be a slow grinding sort of a move to 5500 levels. But I think the consensus has clearly built up that the markets are looking bearish. There's hardly any sort of feel in the market that people would like to invest at these levels. I think people are just staying away. So I think it'll keep drifting.
Hi Ambareesh, afternoon. The big shocker came in from BHEL. I mean, I'm sure a lot of analysts were expecting this to come, but I don't think such a crackdown in margins was on the cards in many analysts' minds at least. Now, what do you do with the stock?
In fact, we had been quite, decently bullish on this stock, but after the sort of results which have come, and also, in the past couple of quarters, there has been like a disappointment from BHEL. So, looking at these sort of results, we have now said it's possibly time to reduce and possibly shift to L&T, where we still have a hope.
Abhijit, what would your call be on BHEL?
Well, the stock has been in a downtrend for quite some time. Actually, the trend is fairly weak. So it gapped down for the day and the morning. I was looking and it seemed like 130, 132 kind of support should hold. And then when it was lunchtime, I find the stock down to 120, where the next target was. Net the sense that the stock is in such a bad shape and the trend is such weak that it makes sense not to bottom fish into this stock at all. It can actually extend further down and test that 95 mark. But if you ask me to whether I would look to buy into the stock or not, even at this price, I won't actually. I'll probably look into some stocks where the strength is there. So BHEL for me is a clean avoid.
Okay, let's take a break on that note. Still quite slow for the market, so seems like that's how we'll close. But here's some market opinion that we got this time around from Dipen Sheth of HDFC Securities. We'll be back.
I would think there is a distinct possibility that after the economy having got into a hard landing mode, as my economist put it this morning, the stock markets are headed for a similar outcome. It doesn't sound very patriotic or encouraging to suggest that markets should crash, but I'm trying to fish around for reasons why markets should sustain at these levels, and frankly I can't see too much of rational ground.
What could drive the declines, Dipen? Because a lot of people are clinging on to the hope that the few 10 or 12 stocks which have managed to support the Nifty will probably continue to manage to support the Nifty even going forward. Do you see cracks appearing in sectors which have been relatively insulated so far?
Well, yes and no, then, because some corporates, as we know, are fairly immune or reasonably immune to a broad macroeconomic downturn. The question is how long they can continue to be immune. So if you look at FMCG, you can say that the consumption story was playing out courtesy higher government spending and resilience driven by demographics. Some of that is now being questioned, especially in the view of higher valuations. Some of the private sector banks were very, very highly valued versus their PSU peers, and the reasons were very clear, whether it was in terms of asset quality or whether it was in terms of business growth. Some of that has come under a cloud in recent times. For a long time, people didn't believe in the IT sector, and surprisingly, lo and behold, a little bit of a depreciation in the rupee and a slight revival in end environment for IT services. And you saw the sector coming back from 10x, 11x kind of multiples. So my view here is that you need to get very, very selective and find very rational grounds for stocks to hold up.
So do you see the prospect of even more capitulation from investors on top of what has happened already in the broader market?
Domestic investors, they've seen almost continuous outflow of money from their funds, and therefore they have been net sellers if you look at broader intervals. On the other hand, the foreigners have been buying, and some of the logic behind that buying is coming into question now, and should there be, God forbid, should there be a sell-off from foreign investors on a sustained basis, I think there is very little by way to support the markets. There is a rush for the exit. I fear we are in bad times.
How do you approach names like BHEL, where stock prices have fallen a lot, but numbers have still managed to surprise on the way down?
For BHEL, I think our earnings number this quarter was probably the lowest on the street. 2 or 3 weeks ago, we published a separate pre-quarter note on BHEL cautioning people that there was no point fishing around for value at 180, 190 levels. There's 2 or 3 years of sustained slowdown in order inflows and earnings growth and cracks in margins visible to us.
What do you do with a name like Yes Bank, which till 2 months back was a big favorite for a lot of investors, and the stock from 550 has come down to 290? Is it a good time to buy, or is there more pain ahead still?
It's difficult to take a call on valuing Yes Bank fairly, and I think that's what has come under a strain right now. I'm not sure whether the numbers will or not collapse in the coming months, but I think the environment for Yes Bank to grow at 25-30% clip is certainly not in place, and to that extent I think there's going to be a challenge for the bank to sustain the kind of numbers that it's been sustaining.
Hi, welcome back to the show. We don't have any great update to give you on the markets except that it's absolutely flat, but I just saw RCF's numbers flash on the screen, so we should just get them up for you in a bit. The Q1 performance, net profits are actually lower than what they saw same time last quarter, and so are the net sales. So the net sales have slipped to 1435 crores versus 1466 crores year on year, while the net profits have slipped to around 4.5 crores versus 6.5 crores year on year. That's the reason why you're seeing a 2% downtick in the RCF stock at this point. Otherwise, it's still a very quiet session for the market. Let's get a quick handle on what's happening in the dollar rupee as well. When we started off trade, there was some recovery, but then it just stabilized at that 60.8 level. So not too much of action is what you're seeing on the dollar rupee currently. But let's Ambareesh is still with us, so let's try and squeeze in a couple of questions. Ambareesh, Tata Motors comes out with its numbers on Wednesday, and there is a fear that this time around the losses will be higher in the standalone business than what they saw last quarter, and even Jaguar Land Rover actually is seeing some of its key markets like US and China slow down. What's your estimate on the numbers, and how would you approach the stock?
I think again this time we could see a disappointment, like you rightly said, and we actually see the China markets really slowing down, even going further. And as far as the Indian like markets are concerned, we see that slowdown continuing at least for the foreseeable 2 to 3 quarters. So even at these levels, I think one should be looking at possibly exiting to a certain extent.
Ambareesh, we just got some news with regards to Educomp, where we do understand that they haven't paid their employees for the past 4 months, and we've seen a lot of cases happen which were prevalent in the fact that so many of these companies got admitted to CDR. How difficult is it now to choose good companies to invest in, and how are you filtering it?
I think it's, that's the most difficult thing in the market, is to choose good companies in the mid-cap space, where clearly corporate governance is one of the major issues. So, despite the sort of issues which some of these sectors are, facing, we normally look at the management quality, and I think that's the only determinant. And the second determinant is the sort of a sector where they operate in, and the future of that sector to actually fill the mid caps. And I've been saying in the past also that there are a number of these mid caps which will actually be erased from the radar in the next bull run. So I think one needs to be very, very careful while picking up stocks at this point of time. Despite some of these stocks falling 80-90%, doesn't really mean that they could be good buys at this point of time.
Alright, just hold on. Ambareesh will just come back in a bit. Let's get a quick handle on a couple of buzzing stocks in trade. Our research team is here to tell us about all the movers and shakers at this point. We'll start off with Pragya, then we have Nigel, followed by Ushan. Guys, over to you. Pragya, let's start off with you.
Well, thanks for that, Sonia. The stock on my radar today is Gujarat State Fertilizer Corporation, or GSFC. Generally we don't talk about this stock. It's a very quiet stock with volumes of just about 1 lakh shares traditionally. Today we are seeing very high volumes. Of course, the stock is reacting to a very poor set of numbers. Volumes higher by about 4 to 5 times. Now, we've seen a sharp slide in all of the company's key numbers. Revenues are down by about 28% on a year-on-year basis to that 1,000 odd mark. There was a consensus expectation of 1,200 crores on this. Apart from that, the company has seen margins of just about 4.1% versus a street expectation of about 13.3%. Overall in its segments also, we've seen fertilizer with just 55 to 60% of the company's revenues. We've seen, revenues down by about 40 odd percent. Remember, the street was working with a number of just about 15% decline because of lower fertilizer trading in this particular quarter. And, we've seen EBIT margin collapse in both of its key segments, industrial products also and fertilizers as well. Now, there are a couple of exceptional items which the company has incurred in this particular quarter, something which they have not accounted for as far as their results were concerned. The company just ended their con call. They have indicated that there is an M2M loss of about 30 crores which the company has incurred due to forex volatility, mainly because of rupee depreciation. Remember, they import certain things like caprolactam, benzene, etc. for some of their chemicals business, and they had an ammonia plant shut down. They're a big player as far as captive ammonia is concerned, and that was a scheduled shutdown for almost 35 days. That has taken a hit and affected their PBT by almost 47 crore. Adjusted for that, actually the numbers are not so bad, but because there was no clarification on this and has just come in on the con call, the stock has recovered just about a percentage or so. Last time I checked, it was down about 7.5%. So a slightly poor set of numbers, of course, coming in, and from GSFC, stock is down in today's trade. That's it from me. Over to Nigel.
Thanks for that, Pragya. There was another disappointment on the street. So Uttam Galva is the stock that I'll be talking about. That stock was down nearly around 6% odd. In the last 1 hour, we have seen it recover some of its losses. Now, the numbers that did come out on the top line, we did see a contraction of nearly around 35 points odd. The margins were maintained at around that 8% odd. But on a year-on-year basis, looking at the EBITDA, it did come down by nearly around 27%. However, on the PAT, we didn't see such a big contraction because the PAT did come down nearly around 38% odd. But this was on the back of higher other income as well as lower interest rates. So on the back of both those factors, we did see the PAT, the PAT didn't get smashed at all. But if you remove both these figures, it would have in fact reported a net loss. This was through a reflection of these smaller steel companies that really have been having it rough. That's it for me. Ushang, over to you.
Well, thanks for that. I've picked up ILFS Engineering. The stock has gained around 10% odd in trade today, and the excellent set of numbers over here. The top line saw a boost of almost 38% and came in at around 485 crore versus 351 crore on an year-on-year basis. Additionally, the EBITDA, if you look at it, it has seen a big jump and is recorded at 55 crore versus 5 crore. The margins were recorded at 11.3% versus a 1.4%. And at this quarter around, the company has turned positive into profit and has a profit of around 3 crore odd versus a loss of around 34 crores which was witnessed in the previous quarter. The other income at this current quarter stood at around 25 crore versus 17.5 crore. Additionally, the expenditure which was the main lag which was seen in the previous year during the same quarter, led by the subcontracting expenses, continued to be high, but yet again this time the top line saw a major boost and which was factored in. Additionally, as of June 30th, 2013, the company has certain outstanding intercorporate deposits which are in the tune of around 344 crores. The management states that it is not much of a concern and the company will be able to recover the amount in the near term. On that note, it's back to you.
All right, Ushang, thanks very much for that. So those are a couple of stocks, as well as Nigel and Pragya. Thanks very much for joining in and giving us all of those stocks which are buzzing in trade. Ambareesh, before we go into break, just had a quick question on financial technologies, because we do have some reports from our sister channel indicating that FMC will now be the regulator for the spot exchange, and the Consumer Affairs Ministry is possibly going to issue a statement very soon on this. Did you manage hearing out the press conference by Jignesh Shah and the clarifications that were made?
No, in fact, I didn't hear it fully, so it'll be a bit difficult for me to really comment on that. But as far as the stock is concerned, I think already the damage has been done, and for it to recover from here, even if things are set right, I think it'll take a long time.
Okay guys, we need to take a short break. Still 15 more minutes to go and then we'll wind down the day flat for the markets, but we'll come back.
Hi, welcome back. Well, holding with a gain of around 0.2% for the Nifty as well as for the mid caps. The mid caps have picked up a tad bit of pace from the low point of the day as compared to the Nifty, so that's a bit heartening to see, and are currently running past the frontliners by a tad bit of a margin, so do watch out for that. Watch out for a couple of these media stocks which seem to be lighting up the screen. So TV today post its numbers is up 20 odd percent. NDTV as well is currently up around 20 odd percent, and something like Punj Lloyd also is reacting well, so that stock is up around 8.5 odd percent. And Shalimar Paints, that comes out with its numbers this week, is quite active ahead of that, so that stock is up around 8 odd percent as well. Abhijit, in terms of the broader markets, would you be recommending any sort of stocks which look attractive on the technicals?
Well, yes, so far for the day we have seen a pretty decent bounce back from the mid and small caps compared to the large cap stocks. But the kind of markets that we are in, and when I say the kind of markets, the markets are down close to 7%, the sentiments are actually fairly weak. I would rather go and stick my neck out and go with the large caps which have actually performed fairly well. If I have to do a contra long trade at this point of time, I would rather stick to the index like a Nifty future or a Bank Nifty future, where the degree of volatility is fairly lower than that in any stocks. So having said that, I'll stay out of the mid cap space both from a long and short point of view, and focus more on the index and a few stocks which have shown fairly good strength.
Ambareesh, what would you do with some of these consumer names now? I mean, last week it was ITC and HUL. This week it's something like Asian Paints. Do you use this as an opportunity to buy into any of them, or would you just keep off?
No, I mean, I think they are still quite expensive, and like what I've been saying earlier, the discretionary spends are bound to come down. I mean, the way the economy is moving, and once those discretionary spends come down, it will clearly have an effect on these companies. So I think even at these levels, possibly it's time to book out to a certain extent. I would say, like sell and exit, but surely it's time to book out to a certain extent.
Ambareesh, what's happening with a couple of these real estate counters? We already spoke to Oberoi Realty some time back, but even the likes of Puravankara, which comes out with its numbers tomorrow, is down 5 to 6 odd percent.
I mean, clearly at the ground level, I think the demand has slowed down quite a lot. Yeah, I mean, earlier we were quite, bullish on the Bangalore-based real estate companies, but even there we are seeing at least some slowdown in the demand at the ground level. And clearly, I think going ahead, we don't see that improving. At least for the next 2 to 3 quarters. So I think even at these levels, possibly it's time to book out.
Okay, time to book out of many of these names. Let's get some closing calls in as well. We do have about 10 more minutes to go, but before that, Abhijit, would you have any stock specific ideas on the short side now? I mean, anything that you'd want to short either from the Nifty space or even anything in the broader markets?
Well, as I said, we are probably a little late in terms of going short in the market right now. A lot of stocks have actually fallen quite sharply. So from a contra long point of view, I sense that the Nifty has potential to bounce back close to 75 points to 100 points. And if it actually fails to go above that 5800, 5850 mark, then probably you might have some shorts. And looking into fresh shorts, banking obviously will be one. Apart from that, the four-wheeler space, Tata Motors and M&M are the two stocks which can actually lead the next leg of fall if Nifty fails to bounce back significantly from here on.
Ambareesh, your call on Coal India?
Coal India, I think at these levels one can hold on. Especially looking at a possible increase in prices. But then, to add fresh, I think I would still wait because overall view on the market is slightly negative. So I think from that point of view, I think you should get this stock at slightly lower levels.
Okay guys, stay on. We just need to take a short break and then we'll come back with the last 10 minutes of trade. Here's Madhu Kela in the meantime of Reliance Capital. He says that he is selectively optimistic now on the equity markets. Take a look.
There is one big factor which is playing out to this negative sentiment is generally the emerging market theme which was being played and which was favoring India a lot is also become somewhat challenging in the last 6 to 9 months specifically, when every other emerging market, if you can see on the right side of it, has lost money while developed markets have made money, and that has made the matters even more worse for India. The markets have become very, very pessimistic. There is clearly, looking at the screen and looking at the fundamentals in the near term, there is really need to be scared. But when I look at the other side of the story, which is the amount of money which has got withdrawn from the market, as well as the people who are going to gold and real estate, after these asset classes have gone up by 5, 6, 7, 8 times in last 5 years, it makes me, I've written this word very, very thoughtfully, makes me carefully and selectively, let me repeat, carefully and selectively optimistic on equities. Equities have been very challenging. However, there are a lot of people who have hidden into gold and real estate in the last 5 years. Significant amount of saving have gone into gold and real estate. I think even these markets in the last 12-18 months have started to show some kind of a fatigue clearly visible.
Hi, welcome back to the show. Just counting down to close for the market. So the Nifty will go home flat. The mid-cap index actually has seen a recovery. So surprise, surprise, there's almost a 0.5% recovery that you've seen for the mid-cap index itself. And a couple of stocks like Punj Lloyd, etc. will go home with quite a bit of gains today on the back of numbers. On the subject of Punj Lloyd, Ambareesh, how do you treat that stock now? I mean, the numbers were stable this time around and we've seen some signs of that in the past couple of quarters. Would you buy it or is it too volatile to touch?
I think it's too volatile, and just hope now that since the numbers are slightly better than what was expected, but then I really don't see the stock really shooting up much more from here because the whole sector is in pain, and I think it's better to just wait and watch for a while.
Okay, so that's Punj Lloyd, which is up around 8% today. Abhijit, in terms of markers on the Nifty now, what would you be watching out for in terms of a key level on the upside as well as on the downside?
Well, for the Nifty future, I sense that the Nifty can actually extend a little higher from here on. Close to that 5800 mark is where the first level of supply lies. Having said that, the Bank Nifty 2 itself has actually bounced back fairly well. So the rest of this week, we can actually hope that the Nifty will extend the kind of nice opening that we have seen for the day. 5800 is the first level, and if it holds well above that, then the next level to watch for is 5855.
Ambareesh, are you expecting anything from the monsoon session of the Parliament at all? Any bill which, if passed, could sort of give a fillip to the market?
I don't think so. I think most of the discussion would be on the food security bill, and with the sort of a support also reducing for that bill. I think, I mean, again, you could see a stormy session. So I don't think there'll be much of a takeaway for the markets from this session.
Ambareesh, your view on a couple of these stocks such as PFC, which reported a good set of numbers. Would you then take a call on REC also ahead of its numbers?
No, in fact, I don't really track that, so it's a bit difficult for me to really comment on that, right?
Okay, let's wind down the day. In fact, not bad. PFC up 12.5% post their numbers today. So that stock has been one of the big gainers in trade. I just noticed that move over there. But big move both on volume as well as on price charts post a solid set of numbers that PFC reported this quarter. But let's tell you about the markets as a whole. No great movement on the headline index today. So it was very, very range bound and just almost unchanged compared to what we saw last week. 56.82 on the Nifty. The mid-cap index had a better day. So up a little less than 0.5%. Ekta will tell you about that in a bit. Before that, let's tell you about the key gainers today. We did see a bounce back in some of these metal names today. So JSPL is your biggest gainer on the street. Sasagoa as well, up about 5.5%, and Tata Steel was up about 2.5%, along with something like NTPC. So these stocks were all up about 3 to 7% odd. Then you had high beta that bounced back a tad bit. So Jayaprakash Associates, Reliance Infrastructure up about 4 to 5.5%. Coal India, the numbers were weak, but on two factors, the street gave it a bit of a rebound. One is because the valuations are quite attractive at 8 times price to earnings forward. So that was one thing, and the second is on the e-auction utilization levels or the e-auction realization levels that will improve in the second quarter. So on the back of that, the many analysts were recommending the stock up about 3.5%. Apart from that, you had a couple of these cement names that were up. So Ambuja Cement as well was up about 4% and some banks, Bank of Baroda, PNB, ICICI Bank all up about 2 to 3%. On the downside, BHEL 20% lower on that stock. This is actually the biggest loss that the stock has seen in a single day in the last decade. So that's the kind of crash that you've seen on BHEL. Very disappointing numbers and large scale target price cuts on this stock as well. Apart from that, you had Bharti Airtel. After seeing many good days, there's some profit taking there, and some other heavyweights like Tata Motors, L&T. In fact, the auto space was under the weather a tad bit. Bajaj Auto as well was down almost about 2%. So that sums up the day's trading action. Largely quiet, but like you said, quiet is good. It's better than a fall at least.
Absolutely. Actually, quite a pickup for the mid cap. So you'd say it's a good day of trade in terms of a close, because we close at the high point of the day. So we're up around 0.4% for the mid cap index. The advanced decline ratio also closes even keel. So there was a bit of an intraday recovery which came in on that. So that closes at around 1:1. Volumes low, so you can sense that the participation was very subdued today. So over 1.17 lakh crore is what we did in terms of overall participation. In terms of a couple of key gainers, then financial technologies, after 2 dismal days of trading, sees a bounce back. So that stock is up around 33%. The management did clarify that the schedule of payment will be declared by 14th of August. So that will be a key date to watch out for next week. Otherwise, a couple of these media stocks did well. So NDTV was up 20% TV Today was up around 20% as well. We had a couple of result reactions which were quite positive. Second day running, HCC was up 18% after the turnaround that it saw. PFC, after the NII grew 39%, was up 13% today. So that stock did well. We had a couple of other stocks which gained, including something like Diwan Housing, again from the NBFC space. So that stock was up around 11%. Otherwise, a couple of these banks also didn't do too badly. So for example, Syndicate Bank was in the green. We had OBC, which reacted well to its numbers over the weekend. So that stock was up around 5%. Kotak changed their rating all the way to add versus reduce. So that stock was quite active. And a couple of other key gainers included Cient, which was up around 5 to 6%. On the downside then, a couple of stocks that deserve mention is MCX, which is down 10%. Oberoi Realty, where there were clarifications from the management, but nonetheless the stock was down 8.5% along with a lot of other real estate stocks. So Orbit was down around 8% and we had Purvankra, which was down 5%. Ansal Housing also, which lost around 5%. Numbers tomorrow for that one. And a couple of other key losers included something like Valecha Engineering, penny stock, but nonetheless that stock was quite weak. And Educom posts the news that they haven't managed to pay their employees for the past 4 months. So that stock was quite weak and down around 5%. SpiceJet came out with this number, so a reaction should come up for you in terms of SpiceJet and how that stock closed up. Abhijit, would you recommend something from a couple of these beaten down counters, maybe from the metal space or maybe even from the real estate space, just purely for maybe a short-term bounce back?
No, definitely no. Because both these sectors are in a quite a strong downtrend. As I said that at this point of time, if someone wants to go contra, it makes sense to go into the index like a Nifty future or a bank Nifty future, where the degree of volatility is much lower. So definitely not the kind of markets where one would look to bottom fish into the metals or the real estate stocks.
Ambareesh, did you have a look at the Grasim numbers? Because that stock did open down nearly around 2-3% odd, but from there it did see a turnaround of sorts and did end flat. How are you reading that particular counter?
No, in fact, I have not really had a proper look at the numbers, so it's a bit difficult for me to really comment on Grasim right now.
Okay, what about something like a JSW Steel, because it did come out with its production numbers today. They have taken a price hike as well, but that stock is not getting over that 550 level odd.
That's true. I mean, like overall, we see the metal space to be comparatively weak, and I think one should at least wait for a quarter more to get into the space. And I mean, as compared to JSW, I would still prefer a Tata Steel in case we see another possibly 10-15% further cut from here. I think Tata Steel is a much better buy.
Definitely, Tata Steel would be very attractive because it will be at around 0.6 times price to book value, which should be an absolute steal given that a turnaround of these ferrous counters can come at any point of time. But Abhijit, what about something like a Shriram Transport, because that stock did see a rally in that move with regard to that banking license, etc. But now it's sitting at the same level from where it did start that rally, so around 650 rupees is what it's sitting at.
Well, sorry for the fact that I don't track that stock that actively, so I won't be able to comment on the stock right now.
Okay, what about something from the pharma space, something like a Divi's Laboratory, because that stock was running away at one point of time. It was reaching nearly around the 1200 mark odd, but from there we've seen a good amount of profit booking, and it's back below that 1000 mark odd.
Yes, this is one stock which has actually not played alongside the overall sector where you have the larger names like a Sun or a Lupin or a Dr. Reddy, which are in a strong uptrend across all time frame. Divi's is actually finding it tough to move into an uptrend. It has got multiple supply on the upside. Currently trading close to the 956 mark. It has a supply range close to that 1K and then 1020. So it's more of a trading stock right now, and from a long point of view, these stocks have to be traded for a short term because the overall hang of the stock is actually in a downtrend. So you can expect that it can bounce back for a test of 1K, but there are better large cap names within the sector where there is a possibility of a better long trade.
Ambareesh, going back to the defensives, we have seen IT rally and holding one end up. My colleague Rima does tell me that Hexaware will be one of the biggest beneficiaries with regard to that rupee depreciating. Today it was up nearly around 4.5%. Hexaware, is it looking good at 120 odd?
I think rupee depreciation is already there in the price of quite a few of these IT stocks, including Hexaware. So, and at the same time, we don't see the rupee possibly going to 64, 65 levels. So, since we don't see that possibility, and since it's already there in the price, I would recommend buying at this point of time. And if one needs to remain in IT, I think be with the best. I think TCS is still a good bet at these levels.
Definitely, likewise everyone, even at around 20 times forward earnings, TCS still recommends a buy. So clearly heading towards 1900 mark, but still, as Ambareesh said, it still warrants a buy. But thanks guys for joining in. It was quite a bit of a range day trading session because we didn't move anywhere at all. At one point of time it did look that we were in fact going to break down, but we did recover, and that's why we did end with marginal gains of around 7.5% odd. But really the kind of quality that did lead today's rally was the likes of JSPL, Jai Prakash Associates, Sesa Goa. All these counters have lost anything between 35 to 60% in this year itself. So that really doesn't give any confidence to our investors. But on that note, we'll slip into a short break. We'll see you on the other side. We'll get you some market perspective. Stay tuned.